Is crypto a scam or the future of finance? Well, if you're watching this video, chances are you've been affected by the recent volatility of the cryptocurrency market. In just a few days, Bitcoin plummeted from almost $49,000 to below $32,000. That's over a 36% drop in value. And that doesn't even take into account the gas fees you have to pay to transact on the Ethereum network, which can be substantial. These dramatic swings have made headlines around the world, with many calling it the end of the world, others calling it the best buying opportunity in years. So the question is, what should you make of all this? Is crypto a scam? Should you throw out all your cryptocurrencies in the garbage? Or is this an amazing opportunity for you to buy the dip? Well, that's exactly what we're going to discuss in today's video. We'll explain why crypto is crashing, we'll talk about how this affects you and what you should do moving forward. Let's get started. So first off, let's talk about why the markets have been so volatile lately. You see, cryptocurrencies are still relatively new to the investing world, meaning they haven't experienced a lot of major events that can move their price. But in the last week, there were 3 significant news events that had large impacts on the market. The first was the news that China would be banning all cryptocurrency transactions. This announcement caused the entire market to plummet, with Bitcoin falling below the $30,000 mark. However, when we looked into this, we realized that China's ban wasn't entirely new. They've been cracking down on cryptocurrency mining since May. And if you're not familiar with mining, it's basically an energy-intensive process where computers use brute force to verify and add new transactions to the blockchain. This announcement didn't really change much because Chinese miners were already finding ways to circumvent the regulations. Instead, they've moved to less populated areas with cheaper electricity like the Sichuan province. And this isn't the first time China has banned crypto either. In September of 2017, the ICO boom was shut down, which prevented companies from raising money through the sale of tokens. But despite these actions, crypto continued to grow in popularity. Many believe China's bans will continue to fail, because they do unaddress the underlying demand for cryptocurrency. The next event that impacted the market was the launch of the highly anticipated cryptocurrency ETF. For those of you who don't know what an ETF is, it's an investment fund that trades on the stock market. It's also important to note that only 3 ETFs were approved for launch, 2 of which are physically backed Bitcoin ETFs, while the third is a Bitcoin futures ETF. And this is where things get interesting because, unlike a physical Bitcoin ETF, a futures ETF is not actually backed by Bitcoin. Instead, it holds contracts that will obligate them to buy Bitcoin at a predetermined date in the future. So it gives investors exposure to Bitcoin without actually holding any. Pro-Bitcoin advocates argue that this is no different than a stock index fund, which buys contracts for ownership in a company rather than owning the actual shares themselves. But the truth is, a futures ETF is far more complex than that because it involves leveraging. Leveraging simply means borrowing money to make a larger bet on an asset. And in the case of a futures ETF, they use borrowed money to buy futures contracts, allowing them to control a much larger position than they could with just their initial investment. For example, let's say you want to invest $100 into Bitcoin futures. If you bought one contract with a 10x leverage, you would actually be controlling $1,000 worth of Bitcoin futures. If the price goes up by 1%, you would make 10%. If the price goes down by 1%, you would lose 10%. Now here's the problem. When you buy a futures contract, you're betting that the price of the underlying asset will remain relatively stable. If it moves too much in either direction, you could get liquidated, meaning you would owe the exchange more money than you have in your account. This is the exact situation that unfolded with the Bitcoin futures ETF. On its first day of trading, the price of Bitcoin fell dramatically. This meant that the fund had to liquidate some of its positions to stay afloat. This in turn further decreased the price of Bitcoin, creating a downward spiral that caused the fund to lose 50% of its value on the first day of trading. To make matters worse, most retail investors don't realize that this fund uses leverage, meaning when they invested $100, they didn't think they were actually controlling $1,000 worth of Bitcoin futures. When the price dropped by 50%, some investors panicked and sold their shares, but that only made the ETF drop even more. And as more people sold, it continued to sink lower and lower until it hit its current value of $38 per share. That's right. If you invested $100 into the Bitcoin ETF on launch day, it would now only be worth $38. That's a 62% loss in just one day. But here's the thing. The Bitcoin ETF wasn't the reason for the crash. It just happened to be trading on the same day. Instead, the price drop was caused by the Federal Reserve's announcement of tapering. Tapering refers to the gradual reduction of monetary stimulus, which in this case means the Fed won't be buying as many treasuries and mortgage-backed securities as they did before. This announcement had major effects on the entire market, not just crypto. The Nasdaq fell 5.3%, the S&P 500 fell 1.8%, and the Dow Jones Industrial Average fell 1.1%. Despite these losses, some argue that now is a great time to buy the dip. And that brings us to our final story, which is about the recent sell-off of crypto assets by Three Arrows Capital. 3AC is a crypto hedge fund that invests in a variety of digital assets, including NFTs. Just recently, they were in talks with rival firms to repay their debts after posting massive losses. The problem is their $1.2 billion debt outweighs their total assets by a wide margin. This means that unless they receive additional funding, they may not have enough money to repay their investors. In an effort to raise additional capital, they began liquidating some of their assets, including NFTs. The issue is, they hold some extremely valuable NFTs, such as the CryptoPunks collection. This sell-off put additional downward pressure on the market, causing prices to fall even further. However, I wouldn't worry too much about 3AC. It's unlikely that you've ever heard of them, and the chances of you being affected by their liquidation are slim to none. Most crypto exchanges have no connection to 3AC, meaning you shouldn't experience any ripple effects, unless you reinvested in another hedge fund that was exposed to 3AC. So those are the three reasons why crypto is experiencing heavy volatility. A. China's crypto ban. B. The launch of the Bitcoin Futures ETF. And C. The sell-off of crypto assets by Three Arrows Capital. But the question is, how does this affect you, and what should you do moving forward? Well, before we answer those questions, we want to thank today's sponsor, Coinbase. What's the no? One place I go to buy and sell crypto. Coinbase. Coinbase is America's most trusted crypto exchange with over 14 million customers. They offer over 100 cryptos and allow you to trade seamlessly between them. With the Coinbase app, I can buy, sell, and store my crypto all in one place. Not only that, but they also have an easy-to-use interface, live chat, customer support, and educational resources to help me learn more about crypto. Plus, new users can get $10 of free Bitcoin when they sign up and make a deposit. Alright, so now let's get back to the video. When it comes to cryptocurrencies, I have a simple rule. If you're not hodling for at least 5 years, then you shouldn't own it in the first place. It means if you need to sell within the next year or two, then you shouldn't have bought it in the first place. If you bought something and it drops in value, it doesn't matter if you hold it for another year. If you need to sell within the next year, then you should consider yourself lucky that you avoided a bigger loss. So in terms of my personal portfolio, nothing has changed. I'm still hodling long-term winners like Bitcoin, Ethereum, and Luna. And in terms of growth stocks, I'm continuing to buy the dip. Right now, there are plenty of opportunities in the market, especially if you can look past all the short-term noise. Now, there's no guarantee that Bitcoin won't drop to zero, but just remember that every asset class has risks. Stocks can drop 95%. Real estate markets can crash. Currencies can collapse, and commodities can become obsolete. So when it comes to crypto, just remember to diversify, ignore the haters, and don't panic sell. Oh. And another piece of advice, never trust anyone who says they can predict the price of Bitcoin. Sure, analysts can make educated guesses, but no one has a crystal ball. And if someone claims they do, then they're probably trying to pump their own coin. Thank you guys so much for watching. Hope you enjoyed this video again. And if you did, please make sure to like, comment, and subscribe. Also, you can follow me on social media. Feel free to add me on Snapchat, Instagram, or TikTok. You can also check out my newsletter. I'll see you guys next week.